Look, I need you to understand something right now. What's happening in the silver market isn't just another price move. This is the kind of setup that comes around maybe once in a generation, and most people are going to miss it completely because they're not paying attention to what's actually happening beneath the surface. Let me paint you a picture of where we are right now. Silver just broke through resistance levels that have held for over a decade. We're talking about price action that hasn't been seen since the early days of the last major bull run. But here's what nobody's talking about. This isn't just about charts and technical levels. This is about a fundamental shift in the global economy that's creating a perfect storm for silver. Think about what silver actually is for a moment. It's not just a precious metal. It's not just an investment vehicle. Silver is the most electrically conductive, thermally conductive, and reflective metal on Earth. And right now, the world is consuming silver faster than we're pulling it out of the ground. Let that sink in. We're in a structural deficit, and it's getting worse every single year. The solar panel industry alone is devouring silver at unprecedented rates. Every single solar panel requires about 20 grams of silver. Sounds small, right? But when you're talking about the global push toward renewable energy, when governments worldwide are mandating solar installations, when China is building solar farms the size of entire cities, those 20 grams add up fast. We're talking about hundreds of millions of ounces being consumed annually just for solar. And that demand isn't slowing down, it's accelerating. But solar is just the beginning. Electric vehicles need silver. 5G infrastructure needs silver. Medical devices need silver. The electronics in your phone, your computer, your car, all of them need silver. And as technology advances, as the world becomes more connected, as we build out this new digital infrastructure, the demand for silver keeps climbing higher and higher. Now here's where it gets really interesting. While demand is exploding, supply is actually contracting. The world's major silver mines aren't finding new deposits at the rate they used to. In fact, most silver today comes as a byproduct of copper, lead, and zinc mining. When those base metal prices drop, silver production drops with it. We're not building new silver mines because the economics don't work at current prices. It takes years to bring a new mine online, and by the time you do, you've spent hundreds of millions of dollars. So we have this situation where industrial demand is soaring, supply is constrained, and the market is starting to wake up to this reality. But there's another layer to this story that most people completely miss. The investment demand side is about to explode in a way we haven't seen in decades. Central banks around the world are diversifying away from the dollar. You've probably heard about the BRICS nations and their plans for a new currency system. You've seen the headlines about countries reducing their treasury holdings. But what you might not realize is that this de-dollarization trend is creating massive demand for precious metals. And while gold gets all the attention, silver is the leverage play that smart money is quietly accumulating. Think about the gold to silver ratio for a second. Historically, this ratio has averaged around 60 to 1. That means it takes 60 ounces of silver to buy 1 ounce of gold. But recently, we've seen this ratio spike to 80, 90, even 100 to 1 during extreme market stress. Right now, we're seeing the ratio compress back toward historical norms. When that happens, silver doesn't just move, it explodes. We're talking about moves that make gold's gains look modest by comparison. Let me tell you about what happened in 2011. Silver went from around $18 an ounce to nearly $50 in less than a year. That's a 177% gain in months. People who understood what was happening made fortunes. But here's the thing. The setup we have today is actually stronger than it was back then. The fundamentals are more compelling. The supply deficit is larger. The industrial demand is more diverse and more critical to the global economy. Back in 2011, the move was driven primarily by investment demand and monetary concerns. Today, we have those same monetary concerns, inflation, currency debasement, geopolitical instability, but we also have this massive industrial demand component that didn't exist to the same degree back then. Solar panels weren't a major factor. Electric vehicles were barely on the radar. 5G didn't exist. The technology sector's appetite for silver has grown exponentially. And here's something that should really get your attention. The COMEX, the major exchange where silver futures are traded, has been seeing its inventories drain at an alarming rate. We're talking about millions of ounces leaving the vaults. When you see physical metal leaving the exchange, that's telling you something important. It means people want the actual metal, not paper promises. It means the smart money is taking delivery and storing it somewhere safe. You know what's fascinating about silver? It's one of the few assets where the paper market completely dwarfs the physical market. There are hundreds of ounces of paper silver traded for every ounce of physical silver that actually exists. Think about that. It's a house of cards built on leverage and derivatives. And when that structure starts to crack, when people start demanding physical delivery, the price doesn't just rise, it gaps higher in ways that shock everyone watching. We saw a preview of this during the Reddit-driven silver squeeze attempt. Retail investors tried to corner the market by buying physical silver and silver ETFs. The price spiked, premiums on physical silver went through the roof, and dealers couldn't keep inventory on the shelves. Now imagine what happens when institutional money decides to make that same move, but with billions of dollars instead of millions. Imagine what happens when a sovereign wealth fund decides they want physical silver as part of their strategic reserves. Let me shift gears for a second and talk about something that might be relevant to your situation. If you're sitting on retirement accounts, if you've got $100,000 or more in traditional IRAs or 401ks, you might want to look into how gold IRAs work. I put together a free guide that covers the whole process. How to get physical precious metals into your retirement account without triggering tax penalties, what the rules are, how the storage works. It's in the description if that's something that interests you. Just something to consider as you're thinking about protecting your wealth in this environment. But back to what's happening in the silver market right now. The technical setup is absolutely screaming. We've got a multi-year base that's been building. We've got a breakout from a massive consolidation pattern. We've got momentum indicators turning positive. We've got volume confirming the move. Every technical analyst worth their salt is looking at these charts and seeing the same thing. This is the beginning of a major move, not the end. And the fundamental backdrop is only getting stronger. Inflation isn't going away. Central banks are trapped. They can't raise rates high enough to truly fight inflation without crashing the economy. So they're going to keep printing money. They're going to keep debasing the currency. And when that happens, hard assets like silver become the refuge. They become the store of value that people flee to when they lose faith in paper currency. Think about what's happening in the bond market right now. Yields are all over the place. The yield curve has been inverted, uninverted, and inverted again. The bond market is screaming that something is broken in the financial system. And when the bond market breaks, when people lose confidence in government debt, where does that money go? It flows into real assets. It flows into things that can't be printed or created out of thin air. Silver is one of those things. You can't print silver. You can't create it with a keystroke. You have to dig it out of the ground, refine it, and transport it. It's real. It's tangible. And in a world where everything is becoming increasingly digital and abstract, that tangibility matters more than ever. Now let's talk about the $5 move that's setting up. When I say silver is gearing up for a $5 move, I'm being conservative. Based on the current price levels and the momentum building in this market, a $5 move could happen in weeks, not months. We're talking about a 15-20% gain in a very short time frame. And that's just the initial leg. If this move has the kind of follow-through that the fundamentals suggest, we could be looking at much larger gains over the next year or two. But here's what you need to understand about silver moves. They don't happen in a straight line. Silver is volatile. It's going to whipsaw. It's going to have days where it drops 3% and makes you question everything. But those shakeouts are part of the process. They're how the market clears out the weak hands before making the next leg higher. If you understand that going in, if you're prepared for the volatility, you can position yourself to capture the entire move instead of getting scared out at the first pullback. The institutional players know this. They're not buying silver because they think it's going to go up 5% and then stop. They're buying because they see the potential for a multi-year bull market that could take silver to levels that seem impossible right now. When you look at the inflation-adjusted high from 1980, silver would need to trade above $150 an ounce to match that peak. Now, I'm not saying we're going to $150 tomorrow, but I am saying that the current price doesn't reflect the true value of silver in today's economy. Think about the industrial applications we haven't even touched on yet. Silver is being used in water purification systems. It's being used in medical applications because of its antibacterial properties. It's being used in advanced batteries. It's being used in aerospace applications. Every new technology that gets developed seems to find a use for silver because of its unique properties. And as these technologies scale up, as they move from prototype to mass production, the demand for silver scales with them. The supply side of the equation is even more constrained than most people realize. The easy silver has already been mined. The high-grade deposits are largely depleted. What's left requires more energy, more capital, and more time to extract. And with energy costs rising, with environmental regulations getting stricter, with permitting processes taking longer, The cost of producing silver is going up. That puts a floor under the price. It means that even if demand were to somehow plateau, the supply constraints alone would support higher prices. But demand isn't plateauing. It's accelerating, and that's what makes this setup so compelling. You have rising demand meeting constrained supply, and the price hasn't caught up yet. The market is still pricing silver like it's 2015, like we're in a period of oversupply and weak demand. But the reality on the ground is completely different. The reality is that we're in the early stages of a supply crisis that's going to force prices dramatically higher. Let me tell you about what's happening in the physical market right now. Premiums on physical silver coins and bars are elevated. That means people are paying significantly more than the spot price to get their hands on actual metal. When you see premiums expand like this, it's a leading indicator. It's telling you that the paper price on the exchanges doesn't reflect the true supply-demand dynamics in the physical market. It's telling you that there's a disconnect, and that disconnect is going to resolve itself with higher prices. The mints around the world are struggling to keep up with demand. The US Mint, the Royal Canadian Mint, the Perth Mint, they're all reporting strong sales and production constraints. They can't make coins fast enough to satisfy demand. And this is happening while the spot price is still relatively subdued. Imagine what happens when the spot price starts moving and FOMO kicks in. Imagine what happens when the general public starts paying attention to silver again. We're also seeing interesting moves in the ETF space. Silver ETFs have been seeing inflows after years of outflows. That's a sentiment shift. That's telling you that institutional money is starting to position for this move. These aren't retail investors buying a few shares. These are funds deploying millions of dollars. They're looking at the same data we're looking at, and they're reaching the same conclusion. Silver is dramatically undervalued relative to where it's headed. The geopolitical situation is another factor that's not getting enough attention. We're in a period of increasing global instability. Trade wars, actual wars, sanctions, counter-sanctions. All of this creates uncertainty. And uncertainty drives people towards safe haven assets. Gold gets the headlines, but silver benefits from the same dynamic. In fact, silver often outperforms gold during these periods because it has that dual nature. It's both a monetary metal and an industrial metal. You get the safe haven bid plus the industrial demand. Think about what's happening with China right now. They're the world's largest consumer of silver. They're also in the middle of a massive infrastructure build-out and a push toward technological self-sufficiency. They need silver for their solar panels, their electronics manufacturing, their 5G build-out, and they're not going to let supply constraints stop them. They're going to pay whatever price is necessary to secure the silver they need. When a country of 1.4 billion people decides they need something, the price goes up. It's that simple. India is another massive consumer that doesn't get talked about enough. Silver has cultural significance in India. It's used in jewelry, in religious ceremonies, in traditional medicine. And as India's middle class grows, as hundreds of millions of people move into higher income brackets, their demand for silver grows with them. This isn't speculative demand that can disappear overnight. This is structural, cultural demand that's going to persist regardless of what happens in the financial markets. Now let's talk about the mining companies for a second. The silver miners are some of the most leveraged plays on the silver price. When silver moves up $1, the mining companies don't just go up $1, they can double or triple because their profit margins expand so dramatically. A mining company that's breaking even at current prices becomes wildly profitable with just a small move in the underlying metal, and the market prices that leverage in. We've already started to see the mining stocks outperform the metal itself, which is often a sign that a major move is coming. But here's the thing about mining stocks. They're not for everyone. They're volatile. They have operational risks. They have management risks. They have geopolitical risks if they're operating in unstable countries. For a lot of people, owning physical silver or silver ETFs makes more sense. You get the exposure to the price move without the company-specific risks. You're just betting on the metal, which is what this whole thesis is about anyway. The options market is also showing some interesting activity. We're seeing increased volume in out-of-the-money call options on silver. That means traders are positioning for a big move higher. They're buying lottery tickets, essentially, betting that silver is going to gap up significantly. And when you see that kind of positioning increase, it often precedes the actual move. It's like the market is sensing something before it happens. There's also the factor of silver's role in the green energy transition. Governments around the world have committed trillions of dollars to renewable energy and electrification. The European Union has its Green Deal. The United States has its infrastructure and climate bills. China has its carbon neutrality goals. All of these initiatives require massive amounts of silver. And these aren't short-term projects. These are multi-decade commitments that are going to create sustained demand for silver for years to come. Think about what happens when electric vehicles become the norm rather than the exception. Every EV uses significantly more silver than a traditional internal combustion engine vehicle. We're talking about 25-50 grams of silver per vehicle, depending on the model. Now multiply that by the millions of EVs that are projected to be sold annually over the next decade. That's hundreds of millions of ounces of additional demand that's baked into the future, regardless of what happens with investment demand. The 5G build-out is another massive demand driver that's just getting started. Every 5G base station requires silver. Every 5G-enabled device requires silver. As the world upgrades from 4G to 5G and eventually to 6G, the demand for silver in telecommunications infrastructure is going to be enormous. And this isn't optional demand. This is critical infrastructure that countries need to remain competitive in the global economy. Let me bring this back to the immediate setup we're looking at. The technical breakout we're seeing right now is happening on massive volume. That's important. Volume confirms price action. It tells you that this isn't just a few speculators pushing the price around. This is real money flowing into the market. This is conviction buying. And when you see that kind of volume on a breakout, it usually leads to a sustained move, not a false breakout that quickly reverses. The momentum indicators are all turning positive. The moving averages are aligning in a bullish configuration. We've got a golden cross forming on the longer-term charts, which is when the 50-day moving average crosses above the 200-day moving average. Historically, when silver forms a golden cross, it's followed by significant gains over the following months. It's not a perfect indicator, but it's one more piece of evidence that this move is real. The sentiment indicators are also interesting. We're not at extreme bullish sentiment yet. There's still skepticism in the market. There are still people calling this a false breakout, saying silver is going to roll over and die like it has so many times before. But that skepticism is actually bullish. It means we haven't reached the euphoric top yet. It means there's still room for this move to run before we get to the point where everyone is bullish and there's no one left to buy. What we're seeing is the early stage of what could be a major bull market in silver. The fundamentals are in place. The technical setup is in place. The catalysts are in place. All the pieces are aligned for a significant move higher. And the $5 move I'm talking about could just be the beginning. If this plays out the way the fundamentals suggest, we could be looking at a move that takes silver from current levels to $40, $50, or even higher over the next year or two. But you have to understand the nature of silver moves. They're explosive. They're volatile. They're not for the faint of heart. Silver can drop 5% in a day and then rally 10% the next day. It's going to test your conviction. It's going to make you question whether you should be in this trade. But if you understand the bigger picture, if you understand the fundamental drivers that are pushing this market higher, you can weather those storms and capture the full move. The key is to have a plan. Know why you're buying silver. Know what your time horizon is. Know what your risk tolerance is. If you're buying physical silver, understand that you're making a long-term bet on the metal. You're not trying to trade in and out. You're accumulating a hard asset that you believe is going to be worth significantly more in the future. If you're trading silver futures or options, you need to be much more tactical. You need to manage your risk carefully, because the leverage can work against you just as quickly as it can work for you. For most people, the sweet spot is probably somewhere in the middle. Maybe you own some physical silver as a long-term hold, as insurance against currency debasement and financial instability. And maybe you have some exposure through ETFs or mining stocks that you can trade more actively, taking profits on the way up and buying back on pullbacks. There's no one right way to play this. It depends on your individual situation and goals. But what I can tell you with confidence is that the setup we have right now is special. This isn't just another minor move in silver. This is the kind of setup that comes around rarely, the kind that creates life-changing wealth for people who recognize it and position themselves accordingly. The supply-demand fundamentals are the strongest they've been in decades. The technical setup is textbook. The catalysts are all in place. Everything is aligned for a major move higher. The question isn't whether silver is going to move. The question is whether you're going to be positioned when it does. Because when this move happens, it's going to happen fast. Silver doesn't give you a lot of time to think about it. It doesn't wait for you to make up your mind. It moves, and if you're not already in, you're chasing. And chasing a parabolic move in silver is a dangerous game. So here's what you need to do. Educate yourself. Understand what's driving this market. Look at the supply-demand data. Look at the technical charts. Look at what the smart money is doing. And then make a decision based on your own analysis and your own situation. Don't just take my word for it. Do your own research, but do it quickly, because this window isn't going to stay open forever. The silver market is setting up for a move that we're going to be talking about for years. This is the kind of opportunity that defines a generation of precious metals investors. The fundamentals are screaming. The technicals are confirming. The catalysts are in place. Everything is aligned for a massive move higher. The only question is whether you're going to be part of it or whether you're going to watch from the sidelines and wish you had acted when you had the chance. This is your moment. This is the setup. Silver is gearing up for a $5 move that could be just the beginning of something much larger. The once-in-a-lifetime opportunity is right here, right now. The market is giving you a chance to position yourself before the real move begins. Don't let it pass you by.